Creatives, Claire from Right Accounts, and in this video I'm going to be talking about JobKeeper. Now if you're not in Australia, you're probably not going to know what JobKeeper is, and this probably isn't a video for you. But if you are in Australia and you're either in the JobKeeper scheme or considering applying for the JobKeeper scheme, this information really is for sole traders, so people operating a business under their personal ABN, whether they use a business name or not. Now there is a lot of information out there on JobKeeper and a lot of it isn't that great, so I honestly recommend going to the source or getting some professional help. That's my first tip. But if you are willing to stick with me, I do have some specific information for you from JobKeeper. So the first one, and this is just kind of trying to help explain what happens in the JobKeeper system, is GST turnover. And what on earth is GST turnover? So the first thing to remember is you don't have to be registered for GST to be eligible for JobKeeper. The reason they use the term GST turnover is because that has a legal definition, and it's used to identify the types of income that would qualify you to register for GST. So what's included, what's excluded, and it really is two main aspects you need to understand. So as I said, certain types of income are excluded, so any exports, any dividend payments, any interest from the bank account, settlements on insurances, GST input taxed items, which are a very specific category within themselves, sales of capital assets if you've sold some equipment, for example, and any gifts or donations. So anything that wouldn't normally have GST added to it is excluded from the GST turnover calculation. And the second thing to note is that the reason they've used the GST turnover, it's a measure of income. It isn't about the profitability of your business. So unfortunately, if the virus has meant your expenses have increased, that won't qualify you for the JobKeeper, even if your profitability has dropped significantly. So the second section that I really want to talk about from the sole trader's perspective is the reduction tests. Now the basic test I think is fairly straightforward. A year-on-year comparison to show you have dropped that 70% of last year's income. So if you're doing April, you compare April 2020 to April 2019. Fairly straightforward. If you have a 29% drop, you won't qualify. It really does have to be 30% or more. Now there are a few alternative tests where the year-on-year comparison really just doesn't become that valid or that relevant. And the main ones that apply to sole traders, the first one is leave. So if in the, say, April 2019 you were injured, on leave, sick leave, or even on holiday, the turnover last year would have been impacted by that if you're operating in your business and you're kind of the main person that earns income. So then it doesn't make April 2019 a fair comparison, so we can use an alternative. The second one is if it's a new business. So if your business started within the last 11 months, you won't have information from April 2019, for example, so there would be nothing to compare it to. So again, the ATO have provided an alternative comparison period, as they refer to it, and you can find out what that is. And then the third one, and this probably applies in situations where previously you may have had a part-time job or even a full-time job, or your business has grown, there is this one for significant increase in business. And there are some measures in there around how much that has to be in 3 months, 6 months and 12 months. But again, if your business has grown significantly since October, for example, April 2019 as a comparison period isn't going to be a fair comparison. So if you do think you need to use one of these alternative tests, because the basic test doesn't apply, it is a little bit more involved. You probably would want to get some professional help or go and read the legislation, because the comparison period does become different. The third thing I would like to talk about is number of employees, and this one seems to have thrown a few people. So if you're the sole trader and you're the only person operating in your business, you are not an employee. You and the business are actually a single legal entity. So the business ABN is registered in your personal name because it is your personal business, and it does impact on the information you do when you fill in the application form. So at the first step, it asks if you have employees. I know a lot of people have put 1 in there. Actually, that should be 0. And if you have done that incorrectly, just give the ATO a call and they can correct that over the phone with you. The second thing to note on this, seems to have confused a few people, is you do actually have to complete the section 2 of the application called the employee declaration, even though you have no employees to declare. And the reason we do that is just because we have to confirm that we have no employees. So it's a declaration of no employees. But the way they set the format really isn't that helpful for that. And you don't have to complete the employee declaration form. So there is a form for employees in a waged capacity, salaried capacity, just to confirm they aren't applying for anybody else. But as the sole trader, you should be across all of that. Now, the last thing I want to talk about is the deadlines. There is a few hard deadlines, but there are also kind of rolling deadlines. So let me explain what I mean about that. The first deadline for application is the end of May, 31st of May. But that is only for the periods of April and May, so the first 4 fortnights. As a sole trader, I presume you're not paying yourself a wage because that wouldn't be right. Anything you're taking out is drawing. So we don't necessarily need to worry about whether the wage has been paid by the date, because that was actually the 8th of May. Now, so the 31st of May, we can apply if we've been impacted in April and May. And we're going to confirm fortnights. Now, note the ATO have used the abbreviation FN for fortnights, just in case you were wondering. But it's not all over if you haven't applied by the end of May. So if your business hasn't been impacted by the required percentage, but is then impacted in June, we can actually apply in June. So you wouldn't get back paid to April because April wasn't affected. You wouldn't get back paid to May because May wasn't affected. But if June is impacted by the required percentage, you can apply at the end of June, beginning of July, and get paid for the fortnights in June. And it is this rolling assessment through to the end of September. So you can keep measuring, keep checking your numbers, and if you then qualify in July, August or September, you can apply at the end of that month for those fortnights. So just to be clear, you do have to apply by the 31st of May if your business has been impacted in April or May. But it does extend on that rolling basis, as I said, through to the end of September. So maybe the income hasn't been impacted enough yet, but the roll on as we go does get impacted. You can apply then. Oh, that was a lot. So lastly, the ATO generally are really very helpful. If you've made a mistake, if you need some help, if you want some guidance, although they often don't give specific guidance because that can get them, a little bit into interpretation of the legislation as opposed to implementation of the legislation, which is a grey area. They generally are pretty helpful and they will normally do their best. Give them a call and just deal with the call waiting and see if they can help you. If you need somebody to help deal with your specific circumstances, as I said at the beginning of this video, make sure you get professional help. If you're looking at 3 months of $3,000 ago, $12,000, it may be worth the investment with an accounting professional to get that upfront advice to make sure you're getting the right entitlements for you. If you've enjoyed the video, as always, I appreciate likes and comments. You can subscribe to get more videos like this from YouTube. I upload once or twice a week generally. And until next time, I hope to see you on another video.